what the challenges are.
School didn't come easily for Danielle.
I have dyslexia, and that very much affected my self-esteem academically.
The principal of the school did not recommend her to take advanced classes. She fought for it, and she got into it, and she did very well with them, too.
Danielle's first job out of grad school was at X, the secretive research facility founded by Google. It's known for dreaming up all kinds of wacky, far-flung ideas.
Can you tell us about the moonshots you worked on?
No, I can't tell you too much about the projects that I worked on. I can say that I was working on robotics.
She loved the job, but wanted to work on something that would reach real consumers sooner. So she left X after a year and joined Intuition Robotics. She's been working in the field for 4 years now, and it took her a while to find her footing in a male-dominated industry.
I've gone to different meetups where there'll be like a circle of men with their like zip-up jacket with their like company logo on it and a beer in their hand. And I'll come in with lipstick and nobody wants to talk to me. This is my closet.
So at first she did her best to fit in, wearing a pair of glasses she didn't need and toning down her style.
So what's the kind of thing you used to wear to a conference?
Stuff like this, blousey things that make you look like you're 40.
But that got old after a while.
And what's the kind of thing you wear now?
Now it's like I just enjoy being kind of expressive and playful in what I wear.
Before we wrap up for the day, Danielle has one more LEQ tester to visit. Joseph is 97. And he's had the robot in his home for 8 months.
How are you?
I'm fine. How are you?
Good. How has Miss LEQ been?
She always tells me to take a drink of water at least 4 times a day.
So we added a whole bunch of new facts to LEQ.
Did you know that a cup of chopped red bell pepper contains more vitamin C than an orange?
Okay. What did you think of that?
Certainly the print was, I could see that quite clearly.
What about this?
Well, I can see that. LEQ, play music.
No problem. It will begin shortly.
By 2050, almost 500 million people are going to be 80 or older. And if current trends continue, more and more are going to be like Joseph and Betty, living alone.
LEQ, stop.
Today, both of them are doing okay. But some of Danielle's other participants have been struggling.
Is it kind of hard to leave them at the end of the day?
It is. Some of our testers are pretty advanced in the stages of depression through loneliness and isolation. And at times, I know that LEQ is cheering them up in their day, but I know that it's only part of the way. No source of artificial intelligence, robots, will ever be able to replace humans and human companionship or human care.
The key to Danielle's work is to embrace that very limitation of machines.
Robots should help humans do what they love, help humans interact with more humans, help humans in general, not pull humans away from humans. not take humans' jobs and leave humans without purpose.
Whether it's in our workplaces or in our homes, robots are soon going to be everywhere. And it's up to Danielle to make sure this robot-filled future leaves us just a little better off.
So don't be afraid. And if you are afraid, come and join us, because I promise it's a friendly place.
Times are tough. Jobs are scarce. It's risky to be outside and around others. Seems like there's very few ways to make extra money during a pandemic. So I guess I'll just hunker down and binge social media until this all blows over. Wait, don't these people make money? How do these people make money? Streamers, YouTubers, Twitch stars. How do they make money? Is it a lot? Is it a lot of work? I know, I gotta ask somebody in the biz, and I got just the guy. Austin John Plays.
This is your full-time job now, right?
As of November of last year, yes. This was always just kind of like a side thing. Like any money that I made from doing my videos and whatever else, I never touched that because I didn't really think of that as being like real money. And then it started coming in more and more. And then it was like I hit my first day that I broke $1,000 and I was like, this is actually going to be money.
How did the YouTube channel come to be?
When the game Pokemon Sun and Moon came out for the 3DS, there was like things that I learned about the game, and then I wanted to just share that information with people. And at the time, I didn't have any way to capture a screen or anything, so I found like generic footage, and I kind of put it all together with so much editing. And that video got 6 views. And then 2 days later, I made another one, and that one got 12 views. And then I just started pumping out more and more content, and people were like, this guy knows what he's talking about. It really just started building on top of itself, and then it was like, my channel really focuses on tips and tricks. So I play a straight 18 hours, and I'll finish the game or get to about the 40-hour mark, and then I'll make my first video. While I'm going through, I have a giant notepad and just scribbles everywhere, and I make these notes of like the things that stumped me, so I know the things that may stump other people.
What do you need to think about if you're building your YouTube channel? 1,
You need to do something that you're passionate about. Not that you like, not that you think you're gonna make money on, something you're passionate about. The other thing is something that other people are passionate about. It holds a special place to them. And third is, it needs to be something that people are gonna seek out information on. In order to enter into the marketplace, you either need to be better than everyone else, you either need to be faster than everyone else, or you need to be more accessible than everyone else. And you can't be more accessible because it's already on the platform. Granted, if you understand how the algorithm works, which is very similar to Google Analytics, then yeah, you can have a little bit of a head start. But if you're not doing it faster, and if you're not doing it better than everyone else, then why should anyone watch your channel? So my income as a YouTuber kind of breaks down to 3 different ways. 1, which is the bulk of it, which is ad revenue. Whenever you go and you watch a video and then there's an ad and then you wait 5 seconds and you hit the bottom right corner and then you go on to the next video, or a non-skippable ad, or the video starts immediately, you get the little banner ad at the bottom, or if you scroll down from the video, the first thing that shows there is an ad. Those are the 4 different types of ads that can appear on every single YouTube video. And all of them pay a certain amount. It varies on lots of things, like the country of the person who posts it, the country of the person who watches it, the time of year, where you are in the quarter, if there's anything going on with a reduction in ad revenue. Like, great example, COVID-19, companies weren't spending as much on advertising. So because of that, CPM went down. CPM stands for click per thousand. I'm using the Roman numeral for 1,000. And that means that for every 1,000 views, you get a certain amount of money. Now, on low ads, when I first started off, my CPM was 30 cents. So every 1,000 views, I made 30 cents. But then once I signed with an MCN and I started making more quality content and more engaging content, some of my better videos and certain times of the year, I can see CPMs as high as $12 to $14. And there's a big fluctuation between, you know, if I post a video when there's no ads being spent like January and February, that's the reason a lot of your favorite YouTubers and also TV shows don't post new videos in that time of year because ad rates are down. Why are they going to make content then? Instead, you're recording and you're bulking up for when ad revenue is higher. The second way that a YouTuber makes income is support, crowdfunding, things like that. When I first started off, Patreon was really the only option, but then they started rolling out supporters and members for YouTube channels. So whenever I have a live stream, you can click a button and then you can become a member, and then you get special icons next to your name. I believe they're called badges, or on any video, you can hit the join button and that helps support the channel. And then the third aspect of that would be merch. And for me, my merch has been somewhat basic. In fact, I'm wearing one of my t-shirts from last year right now. You have to endure the times that your first video gets 6 views, that you posted on Reddit and they say, shut up, and then an auto mod bans you. You have to go through that, because until you go through that and you discover why you're doing it, you're not doing it for other people, you're doing it for yourself. If you're not loving what you do, then it's not worth it.
Huh. So make a channel about something that I'm passionate about. Oh, sweet. I guess I can make the channel about that. Now, how do I grow an audience? How do I get popular?
It's all about diversification, right? You have to have a massive Twitter following. You have to have a massive Instagram following. You have to have a massive YouTube following. Of course, you have to be on Twitch, which is the key platform. But basically, any way you can get in front of your audience, you can engage with your audience, is going to drive those clicks, which ultimately drives the advertiser revenue that you get back from all of these platforms.
It's me and Dan playing video games and talking in a funny manner over them.
They're not just people who are good at games, they're actually people who are good at online engagement, online entertainment, first and foremost.
You have the right to remain stylish. Anything you wear can and will be used against you in the court of fashion.
The streamer is either very, very talented at the game. The best player in the game is generally going to draw a crowd because people like watching people who are very good. On the other hand, they're either very, very good or funny, charismatic, whatever it is on that side.
Oh, no.
You know, it becomes more of a show where they talk about other things outside of the gaming world, and gaming becomes really just a backdrop and an excuse to engage with that audience.
There were those weird, like, Ronald McDonald, like, straight to VHS movies. You remember those?
I'm personable, I'm chatty. I would kind of, you know, when boring things were happening in the game, I would ramble on about, you know, movies I'd watched or books I'd read and, you know, or conversations I'd had and stuff like that. And so I think being personable was a big part of that.
It's not just getting on and playing games. It's getting on and being an entertainer. You are putting on a show.
Every gym has. Okay, he's dead.
To have a larger audience and to have that audience, I think, stay with you, you have to bring something extra. You know, you have to find your niche. You have to find what works and what connects with the audience and what makes them laugh and what makes them keep coming back.
You gotta make it a little more exciting, all right? Throw in a hanging bishop. Have everybody in suspense for a moment.
I think the real most important thing is to just get used to being on camera. Like in any sort of performance thing, is get used to talking on camera. You know, my first few videos were terrible, but because I sat down and did it for 6 to 8 hours a day, I just got used to talking and I got over that uncomfortable hump.
if you go into Twitch purely with the expectation that you're going to make money, make a job out of it, have all this growth, and it's going to be great, you're probably going to burn out prior to getting to that point because there's very little payoff for a long time, right? Like multiple years generally before you really start to see a payoff. And so, you know, those first few times you're streaming, nobody is there. One person shows up every 30 minutes, says hi, maybe, and leaves, right? Like, it's very discouraging, I think, for a lot of people. And so you have to be there just loving it. You have to love talking to yourself when nobody is around. You have to love just the game that you're playing, all of that stuff, because it takes a while. And I think a majority of people burn out prior to getting to the like profitable point of it.
And there you have it. My very own YouTube, Twitch, Discord, and streaming channels all ready to go live. It's a veritable social media ecosystem just on the verge of thriving. So, don't forget to smash like and subscribe, and visit my Patreon for perks. Also, go to my merch page. And one last thing, stay cool, my friends.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
Happy Friday, everybody. Carol Masser along with Matt Miller. Tim, as you know, on leave. This is Bloomberg Business Week live in our Bloomberg Interactive Broker studio, streaming on YouTube and Bloomberg Originals. Friday. I'm so happy.
I am very happy as well.
But
and not just Friday, but the weather.
But I know it's supposed to be a gorgeous weekend.
It's gorgeous right now.
It is gorgeous. It's like really summertime has finally hit.
I just walked up to Dwayne Reed to buy some Twinkies.
I know, we have some Twinkies. We'll get into it because we're going to talk to the hostess CEO.
That's right.
Twinkies.
I was leading you right into that.
Thank you. I know I was a little slow on the uptake. We're going to talk to the hostess CEO about recent earnings, about demand, about what's going up. We're also going to talk about Joe and Kaylee. We're talking about the debt ceiling default. We're going to hear more from our exclusive, Anne-Marie Horton, her exclusive with Janet Yellen. Don't roll your eyes. I mean, these are important
because
things.
Janet Yellen didn't say anything new.
Well, you know, she's got to
Guess what? If we have a real default, it will be catastrophic, but
it would be a big bummer. But we'll get into that. We're going to talk with somebody. Maya McGinnis, how many years have we been talking to her about problems, dysfunction in Washington when it comes to, I feel like, the government's balance sheet?
And it still hasn't been fixed?
I know. It's like, come on, folks. Like, work on that to-do list. Put it number one and really do it. We also have the CEO of Box on integrating OpenAI's ChatGPT. We're going to talk about the new head of Twitter. Elon, wait. Did he actually go to, Twitter to, like, announce it? He did.
He did.
He did. He gave some clues, and then it all came out.
It's I think a pretty exciting story. I can't imagine who would want the job, but she seems like she's up for it.
Well, and will she really be in charge? There's a great Bloomberg opinion piece on that. David Weston's going to stop by with a great guest on the changing dynamics of media. We've got the cooling of the elite collectibles market because Matt bought all those cool cars and watches and Hermes bags.
No, I didn't buy any
during the
of those
pandemic. We're also going to talk about the cost of traveling in Italy with Steve Perillo. You know his dad from his commercials.
Mario.
We're going to get into that in just a moment. Hey, first up, though, we got to talk about the markets with our TV colleagues, Romaine and Scarlett. Matt and I heading over to our TV team. Countdown to the close starts right now.
countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. About 60 minutes left here in the trading day and in the week. Romaine Bostic alongside Scarlett Fu. We're joined right now by our colleagues Carol Massar and Matt Miller. Welcome to our audiences across Bloomberg Television, Radio Originals, and those folks streaming on YouTube. An interesting day here in the market. It looks like we were going to actually end the week, at least on a weekly basis, in the green, but that's all being unraveled here right now. We're off session lows, Carol Massar, but stocks across the board, at least in aggregate, in the red.
You had a wacky little week, and it's not like, is there a few things on our minds yet? We're going to dig into that in just a moment. Having said that, if you were in solar stocks, you're pretty happy today because take a look at some of the names.
First of all, it's sunny today.
Well, I was going to say solar stocks having their day in the sun, investors hot for them, they're on fire. I could go on and on and on, but I won't. Take a look. Is that my board? Yeah, I guess so.
Claymore, First Solar, Enphase,
All
Array.
right, so the solar ETF is up about 2.7%. What's going on? The IRS Treasury Department also issuing new guidance on a clean energy tax credit boosting for manufacturers, a boost, I should say, for manufacturers that source their components specifically in America. So that's the big, broad story. Then you had First Solar buying a Swedish manufacturer in a deal aimed at boosting its expertise in perovskite. I don't know if you've heard about that, but anyway, your promises...
Its expertise in what?
Perovskite.
Perovskite?
Perovskite.
Oh, that's like something that you need to mine to make
It's going to make
panels?
solar panels more powerful, cheaper, and lighter. So that's a big thing. First Solar's up 25%. Enphase is up 3.8%. And then you have Array Technologies up about 15%. These names all sprinkling among the top gainers in the NASDAQ 100 and S&P 500. Matt, what do you got?
Well, I'm looking at the University of Michigan eco data, even though I'm obviously an Ohio State fan. Go Bucks. We saw that they came out with consumer sentiment that dropped, first of all, but the more important part is long-term inflation expectations are the highest that they've been in 12 years. So everything that the Fed is doing, not enough to keep those expectations down. And the expectations is really an important part of what the Fed wants to achieve, right? They need consumers to expect less inflation so that there is
Well, they
less
kind of got
inflation.
that, right? So expectations go up, sentiment goes down.
No.
No?
Consumers expect more inflation long-term than they ever have.
Right, so they're bummed out about it.
Yeah, I know, but they want inflation expectations to go down.
Oh, okay. You're saying that the Fed's not getting what it wants.
All right, I hate to interrupt this Abbott and Costello routine here, but let's just get to the broader markets here, and we'll get back to that debate here. And S&P 500 down about 0.6% on the day. The NASDAQ, which of course had been the outperformer all week long, down about 0.7% on the day, and that's basically your biggest laggard, at least in terms of the major indices, Scarlett.
You're definitely looking at a flight to quality, a flight to safety, really, when you look at the sector breakdown in the S&P 500. Utilities and staples are in the green, but just barely. Staples up by 0.1%, utilities higher by 0.2%. And on the flip side, consumer discretionary. These are your home builders, your retailers, and your automakers. They are the leading laggards. What's notable here is that for the week, they're the best performers. And financials also losing ground by 1%, led lower by banks. And tech names, which Romaine had just mentioned, are the outperformers on the week, also in decline today.
Yeah, interesting. I mean, I was taking a look at Apple. I thought maybe that would be the saving grace here, but Apple shares down about 2% on the day here, and that's going to add up to about 1% loss on a weekly basis. Remember, we have seen a little bit of a pop in Tesla stock in after-hour trading on the idea that with the change of CEO over at Twitter, that would free Elon Musk to focus on, his actual publicly traded company. No, those shares down about 2%, though some of that has more to do with economic conditions and valuation concerns. Schwab updating its latest deposit estimates here, and that gave investors a little bit more comfort. That stock trying to rebound off the big drawdown that we saw earlier in March and in April. Those shares higher by about 2% on the day. But one of the outstanding performers out there is a company that we don't talk much about. It's a small company, Bluebird Corp. It's up about 35%, biggest one-day gain for that company since it went public. It makes school buses. So I guess if there's anything out there that could actually hold up here, sales are great, up about 44% year over year, and that seemed to give a lot of people comfort. I do want you to flip up the board real quick here, and I do want to take a look here at that performance that we've been seeing versus small caps and large caps here. You take a look at that line on the top of your screen here, and that's the outperformance that we've seen on a year-to-date basis for the NASDAQ 100, and that gap that you see between the yellow line and the white line, which is basically representative of the S&P and the Russell 2000, 100,000 gives you some sense of just how narrow this market rally has been. I got to give some credit there to Abigail Doolittle, who actually flagged this a couple days to me. That outperformance that we're seeing right now, as some would say, ain't natural.
Yeah, it's interesting to see, right, the narrow ranges that we're seeing throughout the week here in the trade. And I do wonder, what is it that ultimately gets us out of it? We've talked with a lot of individuals saying we kind of keep waiting for a data point. Could it be resolution when it comes to the debt ceiling? Janet Yellen, of course, as you know, weighing in on this. You've heard it throughout the day on Bloomberg. Our Anne-Marie Horton exclusively catching up with her from the G7 summit in Japan. And here's what she specifically said. It's something we've heard from her before about the importance, the need to raise the debt ceiling.
There is no satisfactory solution for the United States, a solution that will be good for the economy and financial markets, other than Congress acting to raise the debt ceiling.
Right, and of course, that's U.S. Treasury Secretary Janet Yellen at the G7 summit in Japan with our Anne-Marie Horton exclusively. I mean, we kind of know, right? We know that this needs to be done, Matt, to kind of take some of the risk out and nervousness that investors are feeling.
Well, they need to cut spending so that we don't have to do this over and over and over again, right? At my house, if I hit the debt ceiling, you know, I don't just ask for it to be lifted without looking at my finances and pulling back on the amount of money I'm putting out there.
Yeah, but the money has been spent, or it's been already committed, so...
Yes, but they knew they were going to run it. They have, like, visibility. They could see 6 months out, a year out, 2 years out.
No, I don't disagree with you, Matt.
Yeah.
One thing that is notable here is that companies...
I'm sorry, I can't let that slide, though. But, I mean, who are you talking about, the Treasury or Congress?
The Treasury.
Congress approved the money.
I would talk about Congress. Congress needs to do something.
I mean, I know it's easy to pick on the Treasury and say, oh, you know, you guys should have seen this coming. Well, shouldn't the Congress have seen this coming when they basically
100%.
said, we're going to give you 31 point something trillion dollars to spend?
100%, yes. And
like
that's why Congress needs to cut spending as well while they do this. While they lift the debt ceiling, they need...
Members of Congress are so afraid
What, they should just continue to spend freely? They need to cut spending.
They do.
Who's we?
They.
Who's
Congress.
they? Congress, yes. Direct your anger towards them.
Well, not really
I got their
angry.
number.
It's not about anger.
You got a whole switchboard there.
All right.
So
Anyway,
let's be productive, because this has been a long-running issue, and it really goes down to, you know, members of Congress are worried about being reelected and cutting back and
Carol,
not...
it's time to say goodbye.
let me just jump in here because I was going to make a point.
Can you two leave and me and Matt can stick around and hash this out?
One thing that we've noticed is that companies are already doing workarounds when it comes to the debt ceiling concerns. You've seen a lot of companies selling debt this week, Apple among them, with the, $5.25 billion sale. Citi is saying that companies are hustling to raise cash right now while the banking crisis doesn't worsen and ahead of this X date on the debt ceiling. So the action is taking place.
Right. Meanwhile, there's a lot of Treasury sitting on banks' balance sheets, right, as they continue to shore it up. All right, guys, we will be back if we're allowed to speak in the next hour. We will count you down to the closing bell. 4 p.m. Wall Street time. Join us for Beyond the Bell. What we need to do when it comes to a longer-term solution. But in the meantime, Carl Icahn figured out a quick solution when his company and shares of it came under pressure. We did see Carl Icahn, his holding company, rallying today, last night, authorizing a buyback equaling about 27% of its shares trading on the open market. So we did see he's been in a feud with a short seller, Nate Anderson of Hindenburg Research. So we want to kind of get into it because doing a buyback is something that Carl Icahn doesn't do at his company, or at least hasn't,
but squeezing shorts is
87. He does. He knows a little bit about that. So let's get to it with Miles Weiss and Tom Maloney. They are reporting out this story for us. Miles is SEC reporter at Bloomberg News. Tom is Bloomberg News editor, and they join us on this Friday. Hey guys, I want to kick it off with you, Miles. Get us up to speed in terms of what we are seeing specifically. Carl Icahn, his response here.
Insofar as you mean the buyback, or
what he did is like, okay, short seller.
Why is he buying back shares?
Yeah.
Oh yeah. Well, theoretically, since there's such a small float, if Icahn Enterprises goes into the market and starts buying, and there's generally not much volume in the stock, although it's been higher, it pushes the stock up. And basically creates a short squeeze where somebody like Hindenburg would have to try and close out their short positions because they're going to be losing money as the stock goes back up. And the more buying you have, the faster the price goes up, and the worse the losses are for the short seller. It's something that Icahn did about 10 years ago when he got into a big feud with Bill Ackman, who was short Herbalife, and Icahn went into the market and bought a ton of Herbalife stock and to push up the price, and Ackman suffered a lot of losses from that. So there could be some parallels here anyway.
So, Miles, what do we know about the short position that Hindenburg has on? Do they ever publish any of that in terms of how many shares they're short, or the size of the position, and how long they can stay in the market?
Well, it's not clear whether the short position. Normally, you're selling shares short, but it's not clear where they got the stock because there's so little trading. They may have done it with some sort of put options or a contract like with a bank, total return swap, as opposed to actually selling shares short. So not knowing that, it's kind of hard to tell exactly how they're going to be affected or what they're going to need to do.
Tom, come on in on this story. I find it interesting that the hunter becomes the hunted. This is just kind of a fascinating story. Icahn's so legendary when it comes to so much, I feel like, over the last 50, 60 years or so. But there's been a lot going on around his company, right? We know there's a federal inquiry into it. You have the short seller. What is your thinking around this story and how Icahn specifically reacted to it?
Well, I mean, the thing that stuck out for me was there were two bits of news yesterday, really. So one, there was this share buyback that had been authorized, but one other thing they disclosed was that the amount of shares that Icahn has personally pledged to secure margin loans has increased. So that went from 168 million to 210 million shares. Now, to put that in perspective, Icahn Enterprises only has about 370 million shares outstanding. So well over half of their share count is now pledged to secure Icahn's personal debt, which is pretty remarkable and, extremely, extremely unusual. And that can have similar dynamics to a short squeeze, but in the other way. If somebody's levered and the stock is trading down, they need to sell potentially their shares, and that pushes the price down further. So it's kind of a dynamic going in the opposite direction to a short squeeze, potentially.
Tom, can you explain to us the original logic for Hindenburg short? I mean, what did they say? What are they alleging about Icahn Enterprises?
There's a few different things. I mean, the margin loan is part of it. The fact that Icahn has a huge and not very well understood margin loan associated with the stock. But there are also some questions over how they value private assets at the firm. So some of the real estate, some of the private companies. So there were questions around that as well. And then probably the biggest, most obvious thing was that Icahn Enterprises trades at a huge multiple to its NAV. So when they first came out with the short report, I think it was around 3 times net asset value. Most peers, or peers that they were pointing to at least, like Third Point, they trade at a small discount to NAV. So, the question was, why is Icahn Enterprises trading at such a high multiple? Well, it pays out a pretty high dividend. So from a dividend perspective, it can be quite an attractive thing to own. It was paying out something like a 15% dividend yield, but they allege that that dividend is really just being paid for by new investors, and it's not being paid out of actual profits at the firm. And so they called it kind of a quasi Ponzi scheme.
Yeah, right now, if I look at the DS page, we're talking about a gross yield on the dividend of 23%. I mean, it's pretty wild. Well, I am curious about how you two continue to report out this story, because I get the feeling it ain't over yet, although certainly a big move by Carl Icahn last night. Tom, how do you think about, at this point, we really want to understand a little bit more what's on that balance sheet?
Yeah, look, I think he's made some moves to, not only doing this buyback, but to kind of reiterate, and I think he's paying the dividend a little bit earlier than he was. So to try to keep the existing investors in the stock and make it, I mean, you just mentioned the dividend yield, which has only gone up since Hindenburg published a report, because obviously the share price has gone down. I mean, that's an extremely attractive dividend yield. But, Hindenburg alleges that's only possible because retailers invest. They buy shares, and the proceeds from those shares have been going just to pay dividends back to those same investors. So it's a bit of a, it doesn't really make sense economically from their perspective.
Yeah.
Miles, when you look at the track record of these two, I mean, they both have some pretty famous wins over the past decade. Icon notably over Bill Ackman. I mean, Herbalife is like finally coming down to a level where Ackman would make money, I think. But Hindenburg also has some really impressive wins against some big adversaries. How do you feel like it's all going to shake out?
I'm afraid I really don't know. I'm not sure exactly what's going to happen. Because Icon's saying that there's nothing wrong with the company. They're just kind of on opposite sides, and it's I guess only time is going to tell who's right.
Right. Hey, we did reach out. I reached out to Carl Icahn with Tom's assist on the Bloomberg and elsewhere, and calling his office to see if he would want to come on and comment. So far, we haven't heard from him. But Tom, if you were sitting down with Carl Icahn, what would be your first question, or what's top of mind here?
I really want to know what he's done with the margin loans. I mean, he hasn't really explained that. He hasn't explained how big they are, what kind of loan-to-value ratio he's dealing with. And that has a big effect. I mean, that's like, as I said, most of the company shares are now involved in those margin loans. So I think that'd be my first question for sure.
Miles, same question to you.
I'm sorry. What would I want to ask him?
Yeah, if you were sitting down with Carl.
Sorry.
That's okay. It's a Friday.
That's a good question. I guess I might like to know, get a little better sense of how he's valuing things on the balance sheet. The real estate is one thing I'm wondering about, because I think they have it on the balance sheet for only about book value, only about $500 million, and I think that a lot of the time when real estate appreciates, it's not shown on the balance sheet. So I just wonder what the real estate is worth and how much he's borrowed against it.
Right.
What his exposure is. It's not very transparent from what's in the financial statements.
All right, gonna leave it on that. Guys, thank you so much. Appreciate checking in with you. Miles Weiss, SEC reporter at Bloomberg News. Tom Maloney, editor of Bloomberg News. I'm looking at the stock. It's down 32% year to date, up 9% today, but Matt, it's down almost 10% for the week overall.
All right. It's a pretty amazing story, and it also kind of exposes...
What do you find fascinating about it?
I find it fascinating that Carl Icahn is so levered up, that he has so much debt. And of course, he's famous for that kind of positioning. But it just seems... at this stage in my career, were I Carl Icahn, I think I would be winding down the leverage and
Florida.
spending more time in Florida. Exactly.
He is in Florida, but...
less time in fights. But if this is what he loves, this is what he's doing.
All right, you're listening to Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg newsroom with this Bloomberg Business Flash. Looks like the S&P 500 headed for its second straight weekly loss. Now, markets today focused in large part on inflation. We saw a surge in the 5 to 10-year inflation expectations in the University of Michigan Consumer Sentiment Survey. Now, Bloomberg Economics writes, if sustained in the final print later in the month, will meaningfully raise the chance of another Fed hike for the month of June. Tech stocks, they've continued to outperform. The NASDAQ 100 still on pace for its third straight weekly gain, despite the fact that the overall index is lower right now. After a solar tax credit boost, First Solar shares, they are the best performing stock right now in the S&P 500. And Lyft isn't exactly pursuing a sale, but would be open to offers, according to the CEO, David Risher. He was interviewed on Bloomberg TV today. As we look at the indexes, S&P 500, 19 points lower right now. That's down 0.5%. 4111 on the index. The Dow Jones Industrial Average, 100 points lower. That's down 0.3%. The NASDAQ 100 is down 89 points. That is down 0.7%. I remember Fridays you used to have like a wine tasting segment. Did you get rid of that?
We still do. We recently did tequila. That was last
Friday. I'm going to bring in something new, though.
Cinco
at
de
4:20
Mayo.
every day.
Yeah, I No, we do. Why?
What would you expect from
Do you
Matt?
have something on wine for us, John Tucker?
I'm right here, ready to go.
You mean you're just ready, willing, and able?
You got it.
All right, next time we pop the cork, we'll let you know. All right, John Tucker, thank you as always. Well, as you know, President Biden and congressional leaders are planning to resume discussions on the debt ceiling next week. They had been scheduled to meet today, but session was postponed as Republican and Democratic staff members continue to negotiate. Meantime, as you've been hearing on Bloomberg, our Anne-Marie Horton catching up with U.S. Treasury Secretary Janet Yellen in an exclusive from the G7 summit in Japan. And she says there's no satisfactory solution to solving the debt limit other than Congress basically acting to do just that, raise the debt ceiling. Here's some of that conversation.
There is no satisfactory solution for the United States, a solution that will be good for the economy and financial markets other than Congress acting to raise the debt ceiling. There are potential different paths that could be taken if that doesn't happen, but there is not a single thing that can be done that will save the United States from considerable economic and financial damage.
But this plan was outlined back in 2011, and you were there at the FOMC meeting about it, and it said that Treasury principals and securities would be paid. Is this something that, at least for contingency plan, has been discussed with the president?
So my understanding, I was at the Fed in 2011, is that this plan was never presented to the president and never approved. And
But would you present it now?
Look, we would, we are working full-time to work with Congress to raise the debt ceiling. That's where our focus is. We know that the only good outcome is one in which Congress acts as it has many times, almost 80 times since 1960, to raise the debt ceiling. What global markets and American households and businesses need to see is that we have a Congress that's committed to paying the bills that we've incurred as a consequence of our legislation, that we're not a deadbeat country. And if Congress fails to do that, it really impairs our credit rating. We have to default on some obligation, whether it's treasuries or payments to Social Security recipients. That's something America hasn't done since 1789, and we shouldn't start now. So we've not discussed what to do. If that doesn't occur with the president, our focus is on getting it done.
Because as you know, treasuries are the bedrock of the global financial system. And the asset managers I speak to, the investors, they don't have the luxury of not contingency planning. So at this point, should they assume that debt may not be serviced if there's no deal?
Look, if Congress doesn't raise the debt ceiling, we face economic and financial catastrophe one way or the other. And that's why our focus is on making sure that Congress does raise the debt ceiling. I feel that that's something we're going to succeed at doing, and we're working hard to make sure that gets done.
That, of course, is the voice of U.S. Treasury Secretary Janet Yellen speaking exclusively with Bloomberg's Anne-Marie Horton earlier today from the sidelines of the G7 summit in Japan. Hey, we want to get more on the debt ceiling, the looming deadline, how we can just kind of get a handle of the U.S. government's finances, especially by those people we pay to do just exactly that. Maya McGinnis is with us, president of the Committee for a Responsible Federal Budget. She's on Zoom in Washington, D.C. Maya, it's been a while, but great to have you here with Matt and myself. I feel like we are constantly fighting for a responsible federal budget.
And never getting it.
And we never get it.
What you feel right. That is, it has been a long, long time since we've had a responsible federal budget. The fiscal environment is getting worse, and it is in great, great connection with the fact that the political environment is getting worse. And we now have two parties that are so busy fighting against each other, trying to either maintain or gain leadership majorities, that they aren't willing to do the hard work of budgeting, which means deciding what you want to do and deciding how you want to pay for it. And so we're borrowing for pretty much everything. It's contributing to a bad fiscal situation, a bad economic situation, a bad national security situation. And it's tough to see what's going to turn this around in any meaningful way.
So when was the last time we had, a balanced budget? Is it just because of COVID that we're doing this tremendous deficit spending?
No, it's been a long time sort of constant deterioration. So you'll recall that President Bush and then President Clinton put forth packages, and President Clinton worked with Republicans in Congress, put forth packages that put us on track. And Newt Gingrich, and I mean, there was a lot of Domenici. Things were different back then. They did work together. They might not have enjoyed it, but they got some things done, and they got budget surpluses. But quickly after that, we entered a period where we had wars that weren't paid for, unpaid for tax cuts, and recessions, all of which made the situation worse. Surpluses turned to deficits. But now things are much worse. We borrowed a lot during the great financial crisis and COVID, and we should have. Those were exactly when we should have borrowed. But we also borrow when the economy is strong. For instance, the past few years, the economy has been so strong that we are plagued with inflation, the opposite of what you should be doing, borrowing more. But we have borrowed for every single piece of legislation other than the Inflation Reduction Act. And that fiscal policy has exacerbated the inflationary situation.
Well, so crisis problems and crisis or management, or is it more, I'm a big follow the money. And when I follow the money in Congress, it's all about election and making sure that you are playing to the right individuals, institutions, organizations, sectors to make sure you are back in Congress. And so then I always feel like we're not necessarily getting the smartest policy. We're just trying to do whatever we can do to make sure we get reelected. And that means not ticking off anybody. So how do we, that to me is an incredibly broken system, Maya, and I don't know how we ever get around it.
You have articulated the reason for my ongoing despair, which is I am not at all convinced that we are going to turn the ship around as I watch the growing polarization and all the additional factors that are contributing to that polarization in this country. I think debt and deficit are one of the casualties of the fact that we used to have politicians who knew what they had to get done, put in place savings packages, lift the debt ceiling, they'd fight about it, but they wouldn't threaten default, in a way that where they worked together enough to get things done. But importantly, some of those things were difficult. And the truth is, political pandering works. So I'll give you an example, Social Security and Medicare. They both face insolvency. We have to make changes. It's not a political statement. Anyone can read the trustee reports. We have to make changes. There's nothing to disagree there. There is plenty to disagree on what changes we should make, and that's where the policy disagreement should be. But instead, first President Trump, now President Biden, after the State of the Union, pretty much everyone as out there promising not to touch those programs instead of using their important platforms to let the country know that we have to make changes so we can pay the benefits that we've promised and not face insolvency and not have across the board benefit cuts or provider cuts. But the politics of demagoguing Social Security and Medicare are so successful. I am deeply concerned about the presidential election we're about to see, where everyone is going to be tripping over themselves, promising what they won't do instead of how they would actually fix the programs. And that's damaging.
Maya, why don't they, I mean, we knew when the last budget was passed that we were going to have to lift the debt ceiling to pay for it, right? Why don't they just make that, why don't they work that into the budget?
And just got about 45 seconds, Maya.
Yeah, well, first, there has been no budget. The budget committees failed to do budgets, and we don't have a budget ready for next year, and that's quite common. And second, I believe part of this deal that they have to lift the debt ceiling, which has to be lifted without drama, should include a commission that does two things. Reforms our structural imbalances, everything's on the table. Look at Social Security, look at Medicare, look at taxes. And second, reforms the debt ceiling so it becomes an actual part of the budget process, because we can't continue this way. It's too dangerous for the country, and it's not effective. We need to fix our broken budget process.
All right, going to leave it there. Hey, Maya, great to talk with you once again. Maya McGinnis, president of the Committee for a Responsible Federal Budget, joining us via Zoom from Washington, D.C. Matt, let's just go home to our spouses. Hey, debt ceiling, let's just raise it.
Yeah.
We have no debt ceiling.
I wish I were allowed to raise the debt ceiling in my house.
Well, just go down to Congress, be a lawmaker, and you can raise debt ceilings. All right, folks, we're going to continue this conversation right now, though, and I'm guessing she's going to touch on it. World and National News with Nancy Lyons in our D.C. newsroom. Hey, Nance.
Thanks, Carol. Well, President Biden still plans to travel to Japan next week, despite today's postponement of a meeting with congressional leaders on the debt ceiling. White House Press Secretary Karine Jean-Pierre this afternoon provided an update to reporters.
The president and the 4 congressional leaders will meet early next week. When we have a date, certainly we will share that with all of you. Staff will continue to meet. They're going to meet today and over the weekend, so that will continue. The meetings have been productive.
White House Press Secretary Karine Jean-Pierre. Consumer confidence is eroding. That's according to the latest University of Michigan's monthly survey. Bloomberg's Irv Chapman has the numbers.
Joanne Su, director of the survey, suggested the cause in a Bloomberg interview.
Prior to May, consumers really didn't seem to see material changes in their environment, but this month they're feeling much more pessimistic about the future. This is consistent with what we saw in 2011 prior to the past debt ceiling debate. They do understand that there are going to be consequences if you refuse to repay your debt.
Su said consumers now expect that inflation will persist and unemployment will rise. In Washington, Irv Chapman, Bloomberg Radio.
Well, Americans' lack of retirement savings will likely be costly for the country. A new analysis says it could cost federal and state governments an estimated $1.3 trillion by 2040. The Pew Charitable Trust says the lack of savings will result in higher public assistance costs, decreased tax revenues, and lower household spending. In Boise, Idaho, Lori Vallow Daybell has been found guilty on all charges in connection with the murders of her 2 youngest children and a conspiracy to murder her romantic rival. The verdict marks the end of a 3-year investigation that included bizarre claims of zombie children, apocalyptic prophecies, and illicit affairs. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. This is Bloomberg.
debates, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with his Bloomberg Business Flash. This on a day when the major averages, they've been lower, but pairing some of the earlier losses still risk off of the markets. Right now, let's head over to the Bloomberg Breaking News Desk for today's afternoon call. And good afternoon, Bill Maloney.
And good afternoon, John. That's right. U.S. stocks in the red right now, but like you said, off their session lows. Dow's down 61 points, was down 200. S&P's dropped 14, while NASDAQ is down by 65. The U.S. 10-year yield at 3.46%. Gold is down 2, oil trading in the red, and Bitcoin is down by 4%. Of the main 11 S&P sectors, only utilities and consumer staples were in the green. Consumer discretionary and financials were under pressure. And leaders to the upside in the Dow, IBM and Home Depot, while Nike fell by 2% and led to the downside. In deal news, Dan Loeb is no longer exploring an acquisition of Sirius Point. And in other news, First Solar jumped 26% after announcing an acquisition. Wrapping things up, 3M fell as much as 1.4% to its lowest level since 2013. Live from the First Breaking News Desk, I'm Bill Maloney. John?
All right, Bill, thanks a lot. And to get live breaking news over your Bloomberg, type SQUAK. That's S-Q-U-A, GO, on the Bloomberg terminal. Once again, S&P 500 pairing some of those earlier losses, now 14 points lower as we head to the close on Wall Street. I'm John Tucker, and that is your Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, let's get to it. We've got just about 17 and a half minutes left in today's trading session, getting ready to wrap up the Friday trade as well as the week. We got, I know, right?
Thank goodness.
Why are you so tired?
I'm not. I just got very stressed out in the last few minutes.
What happened?
I'm trying to organize a big interview.
Oh, okay. All right. So, well, let's focus now.
Yes,
You
yes,
have a good
okay,
guest
sorry.
coming up. Right now, we've got, as we said, stocks kind of turning the corner, but still in the red, but off their lows of the session. You got a 2-year note at 3.99. Let's get to it with David Dietz back with us, senior portfolio strategist at PPAC Private Wealth Management. They've got about $10 billion in assets under management, and he joins us on the phone from Summit, New Jersey. David, nice to have you here. What is top of mind? Because it does feel like it was a bit of a meh week, although some of the action on the Treasury side of things was certainly interesting. But I don't know. We are all looking for direction in terms of what comes next. What kind of visibility do you have?
Well, it's debt cap negotiations, and that is dominating mentality, both on Wall Street, but also small business and on Main Street. We just got a survey that showed that the sentiment of small business people is now at a 10-year low. Consumer sentiment index that's released today showed that consumers were at a 6-month low. And I think it's all because of the frustration in Washington as to failure to come together.
But can I ask you something? If I walked on the street of Main Street, USA, and I talked to people about the debt ceiling, I have a feeling, I don't know that everybody would be that concerned.
They wouldn't care.
They just,
I mean,
to be
on the one hand, you're, on the one hand, you're right. People are still going to send their kids to school next year. They're probably going to go out for dinner this weekend. They still have some idea to take a vacation in the summer. So, in that sense, it shouldn't be a problem. But we can't say the risk of a default is 0%. And all the experts are saying that no one really knows what the effects would be. But the so-called foundation blocks, such as the Treasury debt, if they were to become undone and in default, what would be the fallout? It would not be pretty.
Yeah, well, actually, Anne-Marie Horton was just talking to Janet Yellen about that this morning, saying, there's a lot of investment professionals out there who, they don't have the luxury of not caring about this issue, right? They can't make really a plan B. They need to be prepared in case there's a default. Do you have to adjust your strategy?
Yeah, it's a great question. First question every client today had on their mind was, what are we going to do about that? But, you know, we go back to time horizon here. I said, well, if you're in stocks, you shouldn't have a 1 or 2 month horizon. Indeed, that 10-year Treasury is much below where it was just 2 months ago. So what people are saying in the marketplace, the experts are saying, in the short term, there's uncertainty and volatility. In the long term, of course, the Republic will pay its debts. They've raised this debt cap thing about 78 times since 1960, and they will do it again. The one thing I love about this, Matt, is this is not an asteroid coming in from outer space. This is not Putin in, you know, an unknown quantity. These are just our top leaders just have to make an agreement to push that, kick that can down the road, and we're going to be fine.
David, what do you like right now? Let's assume that the debt crisis gets resolved and move on from that. What do you like in this market? We've had a pretty good run year to date. Obviously, last year was awful, but where do you want to put your money?
You know, everywhere except something that says we're all about AI. You know, if you strip out those 10 AI popular stocks from the S&P 500, you go from an 8% year-to-date gain to -2, which means, you know, quite frankly, Matt, we haven't done that well this year. And so anything other than chasing stocks because they have a big AI plan, you know, which could do as well as streaming did 3 years ago when that was announced, is something to be avoided. But I mean, so we want to be diversified. I think you got to look at some of the.
Well, wait a minute.
Banks.
Can I ask you something though, David? Is it chasing AI or just being smart about it? I mean, you know, this technology, AI, nothing new. It's getting much more advanced. We've been talking about that over the last couple of weeks. You've seen NVIDIA and a couple of names, a handful of names that have really been the reason why you see market averages when they do move up or when they do rally. It's because of that AI connection. And yes, we'll figure out some of the stuff that doesn't make sense, but safe to say that this is going to impact our world in a pretty significant way.
You know, it will, absolutely. Just like the metaverse has said that it was going to impact our world.
I don't know that it's on the same level, though.
Well, so, you know, the AIs, it's not a hard line, AI, non-AI. Many companies say they've been incorporating AI-like features for the last decade. So here's the thing. The large companies, no question about it, your Microsoft, your Alphabet, your Meta platforms, they're incorporating that. They're not the pure plays. Fine. They will be big players in this, and that's good. Where I'm discouraging investors from getting involved with is the smaller companies, which all of a sudden have an epiphany. You know, BuzzFeed in January said, "Oh, we're going to write our articles for the AI." The stock tripled. There's been no follow through whatsoever. So that's where you really have to avoid.
By the way, David, we got a guy coming on later who's going to kind of gawk at all the people who lost money on crypto. And I was thinking you could have done the same thing with the housing crisis. You could have done the same thing with the dot-com bubble. Amazon is one of your picks. And I just wonder what you think. Where does it go from here? Because it's been an awesome ride for the last 25 years, right? Mm-hmm. But can they grow any more? They're already so dominant in online marketing.
Yeah, absolutely. I love Amazon. First, it's down 40% from its peak. So although it's been one of the best stocks that the planet's ever seen, it's still well off of its highs. What I like is they are market leaders in the two best businesses, in my view, on the planet. First is the cloud. We know the cloud's going to be growing at a double-digit clip as far as the eye can foresee. The other one is e-commerce. I mean, what's easier and better than just clicking on your screen to get what you want delivered to your doorstep? And they're number one there. You know, in fact, they have twice the market share over the next competitor on the cloud, which is the Azure of Microsoft. So I love that. I'm not quite sure I necessarily see the connection between e-commerce and cloud. So in a worst-case scenario, they could divide that company. We're seeing Alibaba doing some of that over in China and perhaps unlock shareholder value there. But I think here's an opportunity. It's trading, Matt, at 2 times sales. You can buy Azure at Microsoft, but Microsoft's trading at 11 times sales. Even eBay, which is an inferior e-commerce platform, to Amazon's trading at a higher price per sales ratio.
All right, gonna leave it on that note. Have a great weekend. David Dietz, he is Senior Portfolio Strategist and Managing Principal over at PPAC Private Wealth Management. They've got roughly $10 billion in assets under management. Joining us on the phone once again from Summit, New Jersey.
I love cheap price to sales companies.
That's pretty cheap.
Yeah. Unbelievable.
Considering, right? All right, you are listening and watching Bloomberg Business Week on Bloomberg Radio. This is Bloomberg.
Get the Bloomberg Business Week newsletter, BW Daily, delivered to your inbox every day. You get the power of Business Week in a handy form. Sign up at Bloomberg.com/newsletters or go to businessweek.com.
Now, your company news headlines on Bloomberg Radio.
And I'm John Tucker at Bloomberg World Headquarters. Let's talk about three companies to start: NVIDIA, Microsoft, and Alphabet. They're the biggest contributors to the S&P 500's gains since the start of this year. And now strategists at SocGen, they credit that to the investor thirst for everything artificial intelligence. They write AI popular stocks, the S&P 500 would be down 2% this year. Elon Musk making it official, revealing his successor at Twitter. Let's get more on that from our own Bloomberg's Steve Rappaport. Steve.
Elon Musk tweeted the big news about the new boss, writing, "I am excited to welcome Linda Yaccarino as the new CEO of Twitter." Musk said Yaccarino will focus primarily on business operations, while he shifts focus to product design and new technology. Yaccarino was a high-level executive at NBC Universal, overseeing major live events like the Super Bowl and the Olympics. She also helped launch the streaming service Peacock. Back in December, Musk in a Twitter poll asked users if he should relinquish leadership of the platform. More than 57% said yes. Steve Rappaport, Bloomberg Radio.
And Google's co-founders, they're reaping the rewards of the artificial intelligence frenzy, adding more than $17 billion to their combined wealth as the company unveiled a revamped search engine. Larry Page's net worth, that increased by $8.7 billion this week. Sergey Brin's rose $8.3 billion. Now, those are the company stories we're following. I'm John Tucker. This is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, everybody, you are listening and watching Bloomberg Business Week. Shortly, we'll head over to Scarlett and Romaine, wrap up the trading day for this Friday and also, of course, for the week overall as we head into a weekend. In the meantime, I'm here with Matt Miller. Tim is on leave.
I don't know if I'm going to make it.
Why? Why? Because you
I've had so many Twinkies now that I don't feel well.
We are going to talk with the head of Hostess.
I've eaten an irresponsible amount of Twinkies.
You had 2 pieces of pound cake. Was that Hostess or no? That was something else. And then you had a Twinkie.
Yes.
All right. Well, TBD. Matt will either be here for the interview or he won't. In the meantime, can we talk about Tesla tweaking their prices here in the U.S., raising them as much as $1,000? What is it that they are doing? The most expensive models went up $1,000, right?
Right. So they're raising the price on the top end and they lower the price on the bottom end. That's what they've been doing over the past year, because they want to steal.
This is the
market
S and
share.
X models.
The S and X are the top end, exactly.
Correct.
So the X is the big SUV with the doors that go like this.
Very cool.
Which is how you know you're really rich, if your doors go like this instead of this. Like a middle-class person, if your doors go like this. But the lower end, they're really trying to take market share away from, GM is coming out with all these affordable electric cars. Ford is coming out with affordable electric cars.
So that's where they've been cutting.
That's where they're cutting prices. But at the top end, of course, people who have money right now are still willing to pay top dollar for the cars that they want. So if you want a Model X, there's not much else out there to rival a Model X. So you're going to pay whatever. On the other hand, I will say they're cutting prices they raise price on the car and they give you free supercharger access for 3 years.
That's pretty big.
Exactly. It is very big.
Yeah.
And it's going to cost them money over the next 3 years.
Right.
So
they're
raising the price, but they're giving you something.
They just want people like Apple, right, within their infrastructure. They want people that are like Tesla families, ultimately, right? And
Very much so.
You just kind of get people into it, and hopefully you keep them in. Meanwhile, real quickly, they recalled over 1 million cars in China over a braking defect.
Yeah,
That's worrisome.
Very few people are old enough to remember the Audi 5000 issues in the 1980s. That was the first unintended acceleration problem that demanded a huge recall. Now they're seeing it again in China.
Did you ever have that, like with a car?
Unintended acceleration. That's what I told the officer.
Oh, yeah, so then you didn't get the ticket. All right, folks, ready to wrap up the trading day and week. Beyond the Bell with Scarlett and Romaine and Matt and myself. It starts right now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Scarlett Fu. We're counting you down to the closing bell. Here to help take us beyond the bell. It's a global simulcast with Carol Masser and Matt Miller. Welcome to our audiences across Bloomberg Television, Radio Originals, and those folks streaming on YouTube. Carol, last time we spoke, stocks were pretty much around session lows. They are well off those lows, still in the red. I was taking a look, though, at just some of the volume and the sort of realized volatility there, and it is dismal here. In fact, we're kind of looking at some of the lowest levels that we've seen going back to 2021. So this isn't just about price action. It's also about participation and really the lack thereof right now.
Yeah, I feel like we've been talking about this all week, right? In terms of not a lot of conviction behind the trade that we're seeing. And it does feel like we're in kind of this Netherland, if you will, in terms of we've got through most of the earnings.
The Netherlands?
Netherlands?
Hinterlands. How about that?
Hinterland? Something like that. It's that kind of a day. But just this era where I think investors don't know where to take direction from. So, yeah, that's kind of how it is.
I think you're absolutely right. I mean, I was looking, for example, to see if there were reasons behind the big decliners, right? If you look at the S&P 500 with your move function and you organize it by point deductions, you'll see all of the biggest names taking away points. There's no reason for any of them to really fall. And then I just changed it to percentage declines to see if I could find reasons for the smaller companies, and there aren't. So for the most part, we haven't had any big earnings out. You haven't had any horrible lawsuits out. Nobody's gotten a Wells notice today that I know of. You're just seeing a sell-off in stocks.
Well, which is no longer a sell-off at this point, right? It's just another meh day at the end of it, with the Dow basically unchanged, and the Nasdaq giving a little bit back from earlier this week.
All right, we get the closing bells here in New York. The Dow Jones Industrial Average lower by roughly about 78 points as we wait for these numbers to settle. That's going to be basically a flat line here on the day. The S&P 500 down 7 points, or about 0.2%. The NASDAQ Composite down about 0.4% here on the day, while the Russell coming in down about 0.2%. On a weekly basis here, we're basically either flat to lower here. And Matt's point here about the idea of there's nothing really moving the market, but I think that really is the story here, is there's nothing really there to move it any direction, either higher or lower.
All right, so maybe that explains too why we've got kind of an even split in the S&P 500. 250 names actually gaining some ground today, some really strong outperformers, but 246 to the downside, Scarlett. So kind of just down the middle here.
Yeah, down the middle there, but when it comes to the industry group breakdown, you'll notice that the decliners have more sizable moves than the gainers. So let's start with the bottom here. Autos and components, there are 5 members in that index, off by 2.25%. All 5 members are lower. Banks also remaining under pressure, lower by 1.2%. Consumer durables also losing almost 1% in the day. When you look at the gainers, there's definitely this sense of safe havens getting a lift here. Utilities and household and personal products. We should mention that although I don't see software on this list, we were just talking to Nicole Webb, who mentioned that Microsoft is kind of an enterprise utility company, given how investors have flocked to these big tech companies with their stable earnings, their free cash flow, and their robust balance sheets.
All right, folks, let's get to some of the individual gainers. I talked about solar stocks outperforming earlier today. A couple of different reasons. We talked about the IRS and the Treasury Department, basically a clean energy tax credit boost for the manufacturers that source their components specifically in America. So that gave a huge boost to the overall group. For solar, also doing a deal, so that would maybe basically make it cheaper. Solar panels, powerful, lighter, all that good stuff. So anyway, First Solar up 26%, top of the S&P 500, jumping to its highest since 2008. Enphase Energy, it was number 1 in the NASDAQ 100. It was up about 4%, off its highs of the day when it was up about 7%, but nonetheless a strong rally. And then News Corp, number 2 in the S&P 500
Oh my
specifically.
God, for 20 years we've been going back and forth about this, but I tell you it's Corp.
Oh, News Corp. Didn't I say that?
You can pronounce the P.
Oh, did I say News Corp? That's why you get. All right, you know, I'm done. I am so done with
Carol and I have been working together since we were in high school.
The
just
market's
so you know.
closed. I'm out of here. News Corp up 8.7% here. Reported third quarter results that beat expectations. Analysts positive on the report and on the company's cost.
I'm being a little pedantic because I had 3 Twinkies. And I had the sugar spike, and now, you know.
The sugar spiked at about 3 p.m., I think.
Exactly. I have some losers here. I think Robinhood is interesting because yesterday there was a pop on the results, right? And it was up, I don't know, 5 or 6%. Now it's been decimated today for no good reason. It's down 10%. I guess taking profits is probably the best way a stock writer would describe that. You also have a drop in Spotify. There's not a lot of news out on Spotify specifically, but actually Carmen at Bloomberg News has a great piece on the terminal about music streaming services in general with a huge fraud issue on their hands. She says it's a $2 billion fraud issue, so maybe investors are lumping it together with the others and selling it off. And then one of them, a smaller company that I think is really interesting, Medical Properties Trust. It's falling today after 2 of its hospitals, 2 of its tenants, have hired advisors to refinance their debt. And maybe they're going to have problems with that. And this is the commercial real estate issue maybe coming home to roost. I know that a lot of property owners are going to face difficulty refinancing at these rate levels when, they're used to ZIRP.
Yeah, we've seen a lot of the REITs pretty much in that commercial and industrial sector under pressure on a weekly basis here. We should also point out PayPal, Tyson, and Catalent among some of the biggest decliners here. And then you talk about the tail wagging the dog and what we've been seeing in the rates market. A 2-year yield that looks like it's going to close out the day higher by about 9 basis points, kind of scraping that 4% mark once again here. But remember, we had 2 straight weeks of rallying in that 2 years. So the sell-off that we had this week, probably just a little bit of an unwind over that here. A similar story when it comes to the 10-year yield, though we did continue to see that sell-off go for a second straight week. And we don't have it on the board, but I do just want to point out on the shortest end of the curve, because we've been paying a lot of attention to what's been going on in the Treasury bills, that 1-month bill right now camped out right around 5.5% here. Remember, just 2 weeks ago, we were below 4%, and about 4 weeks ago, we were down at around 3.2%. So a lot of the heightened fears right now around the debt ceiling, around that X date, particularly with maturities that are going to be around that X date, June, July, August, what the market right now, at least in the Treasury market, is really focused on.
You know, a headline just crossed about how the U.S. had, what, $88 billion of extraordinary measures left under the debt cap as of May 10th. That's definitely going to be a focus in the coming week. Any kind of discussion, any kind of commentary from the president, the White House, Congress on that front. Also, I'm looking ahead to retail earnings next week because you know it's the end of earnings season when the likes of Home Depot and Walmart start reporting.
Yeah, no, it's really important, right? We're going to get from the big retailers what it says about consumers, what it says in terms of pricing, and even some of the pressures that we continue to see in supply chain. So yeah, it's going to be important.
I think, you know what, I'm just looking at another story that came across the terminal right now, or a headline. U.S. had $88 billion of extraordinary measures left under debt cap.
I just said that, Matt.
Scarlett just said it.
Yes. Okay. Oh, you just said that? I was just reading it. Sorry. I think that, you know, the debt ceiling worries, but more importantly, the inflation expectations are really what's weighing on this market, which is why we don't really see a lot of reasons for the individual movers.
Yeah, the inflation expectations, I find it really interesting because how do people answer that question? If someone were to ask you for your expectation on inflation, I mean, I'm kind of taking a stab in the dark, or I'm just kind of basing it on what's been happening. It's recency bias.
Yeah, absolutely. I mean, I guess that's part of it. I mean, obviously, some of the survey data is always going to create a certain degree of distortions here. Yeah. But I look at it as sort of a trend level. I mean, we were talking to an economist earlier. She was kind of poo-pooing some of the survey data. I understand why economists sort of look at it and say, okay, always take that with a grain of salt. If it's one report, yeah, but if it's like, 7 or 8 in a row, you have to kind of wonder, where things are moving.
They always say, wait, watch what they do, not what they say, right? Because people can answer anything in a survey.
Very true. Well, you know what private lenders are doing? They are hiring restructuring pros because they are anticipating more defaults. So I think that's true. Like, we have to look at what these other firms are doing and what they are anticipating. And if we're expecting, we got some of this at Milken, I felt like, firms that are working in the distress space or default space, they are getting ready for more activity, whether it's mid-market sized companies in particular, which might ultimately see the same stress, but that could be an indication of things certainly slowing down and more problems.
What about, but also there's this issue too. I mean, we were talking a couple days ago with that Jamie Dimon interview and him kind of saying that the Fed or the regulators need to sort of put this banking crisis to bed here. I know we've got a couple of hearings next week on Capitol Hill. We know Congress won't solve anything. I mean, they can't even pass a budget. But there's a broader question here of how much this gets dragged out and how much that is weighing on sentiment right now, because it's not just one thing anymore, right? It's the debt ceiling, it's the regional banking crisis, and obviously the Fed is still in the picture when it comes to
and geopolitical tensions.
And well, look at just the week where J.P. Morgan, bought First Republic, and we thought, okay, things are going to calm down, and then not less than 24 hours, later, we were having more stress again in the regional banks. So it's constantly, it feels like, Scarlett, things coming at us.
Yes, absolutely. And I go back to what Jamie Dimon had said in that wide-ranging conversation with Francine Lacqua. He also said that the regulators are at risk of overdoing it. They'll get too constrictive when it comes to making sure that there is a lot of regulation, a lot of new rules, and as a result, that's going to compound whatever credit tightening is taking place.
Yeah, I think, you know what, that was a difficult interview because Jamie Dimon was saying one thing and then the exact opposite. He was like, regulators need to finish this. And she said, do you think they need to give us a comprehensive solution? No, I don't want a comprehensive solution. So what did he really mean? I applaud Francine Lacqua because he was not making that easy.
Well, it's always a balance. You want oversight.
Yeah, but you can't say one thing and then the exact opposite thing. You can if you're Jamie Dimon.
Okay, well, one thing I do want to say before we go, our producer, Faith, who is not leaving the company, but she's not going to be in our ears anymore in this journey when we are doing our cross-platform, but we wish her well on our next ventures here at Bloomberg. I'm going to miss you in my ear.
We're going to be reading her headlines on air.
We are going to be reading her
headlines.
That's what I suspect. Anyway.
I'll read them right after you did, Scarlett.
We love you, Faith. All right. That's a wrap, guys. Our cross-platform coverage, radio, TV, YouTube, and, of course, Bloomberg Originals. Thank God it is Friday. We will see you on Monday. All right, market close, we've done that, but all week we've been talking a lot about AI. The world is awash in artificial intelligence. We had Google, we had IBM, Palantir this week, and I gotta say, Matt, ever since Microsoft announced that $10 billion investment in OpenAI's ChatGPT, it's just been like off and running.
Yeah, I don't know if we knew at that time what we were going to get, right? It was a massive amount of money, and I remember thinking, wow, that's a lot that they're paying for this, because until then, AI, I had never had a great experience with it, but now I'm obsessed with AI-powered Bing. And by the way, I was also someone who, I couldn't be far enough away from Bing previously. Like if Bing accidentally popped up on my computer, I changed it to Google as quickly as I could, and I made Chrome like, you know, my default. Yeah. But now AI-powered Bing is so much more useful to me than Google search.
All right, so this is good to know. So it's changing, impacting your behavior. Let's see how it's changing things in our next guest's life. Back with us is the co-founder and CEO of the $3.8 billion market cap content and file sharing company. We're talking about Box. Aaron Levy is with us on Zoom from Redwood City, California. And Box just announcing its own integration of OpenAI's ChatGPT. That was earlier this month. Aaron, anyway, nice to have you here with us. How are you? How's business?
Good to be here, and thanks for having me. We definitely are extremely excited about AI and the role that it's going to have and how companies work with all of their most important content and information. And you know, really the big opportunity is when you think about how much data we have in the enterprise that is sort of what we call unstructured data. So structured data is, you know, stuff that goes into a database. It's CRM information. It's financial data. Well, inside of your documents, it's all unstructured. It's your marketing materials. It's your contracts. It's your financial.
Wait. So tell us how generative AI is going to change things dramatically for you,
especially
or for
at
customers.
Box. When I see, first of all, the utility of your company is undeniable. So I'm not downplaying it, but it's a box, right? We put stuff in and we take stuff out. How does AI help?
Yeah, so we store tens of billions of documents for customers, and so with AI we can actually unlock what's actually inside of that data for the first time ever. So you can ask questions of your documents. You can look inside of a contract and figure out what terms in that contract might have the highest amount of risk. You can look at a marketing asset and ask AI to improve that marketing asset. You can look inside of an HR document and ask questions. So it's a complete transformation of what we can do with all of the data we have in an enterprise.
How does it move the needle for top and bottom line? So basically, how does it, for you guys, move the needle financially in terms of growth of users and or usage?
Yeah, so we think it's going to just unlock the potential of what you can do with your content. So we can speed up productivity in an enterprise. We can make employees be able to have instant expert analysis on top of their data on demand. So again, imagine being able to talk to a lawyer instantly about the contract you're looking at, or a marketing expert about your marketing asset that you're creating. And so all of a sudden, you get all of the power of these advanced AI models, and you can start to understand your data in completely new ways.
So how do you think this is going to improve your revenue? I mean, what's this going to add to the top line, or is it a bottom line booster?
Yeah, I think it's ultimately going to be a major tailwind for enterprise software in general. We haven't, sort of finalized exactly how we're going to monetize or commercialize the product. We've first introducing the technology to a select set of customers. There'll be some elements that we likely do charge for, and that could provide a top line boost over the long term. But we also think that this is going to be incorporated into all software. I don't think you're going to expect to use less intelligent software in the future. And so I think all the enterprise software that we leverage is going to fundamentally be infused with artificial intelligence, and that's just going to be the expectation that people have about their software going forward.
Is it cheap or is it expensive to use? I mean, I don't know, do you pay like a one-time thing or a license every time someone uses it? How's it going to work out in terms of what you pay for it?
Yeah, well, we pay for the underlying usage of the GPUs that the AI models run on top of. And so every time you ask a question, that has to go into a set of computers that go and process that data. That can be kind of relatively expensive, more so than the usage of just a core CPU. But it's pretty manageable. And so we're going to find an efficient way to price that into the product.
Safe to say there's still a lot to be learned, a lot to be developed, a lot to be fine-tuned when we're talking about all of this, Aaron?
Yeah, I think there's what we've worked on is fundamentally focusing on things like the accuracy and the reliability of the answers that you're getting back. So that sometimes you'll go ask ChatGPT a question and it can do this thing called hallucination, which is it sort of makes up the answer in some cases. We've worked to ensure that doesn't happen with corporate data, and the reason for that is we're telling the AI model to only answer the question based on the limited set of data that we're giving it, which dramatically improves its ability to answer accurately. And so these are the kind of things that we've worked on: data privacy, data security, data integrity, working with these AI models. We don't have any of the AI models being trained on the data that we're leveraging. So we're building really a safe and secure and compliant solution for enterprises to bring AI into their organizations.
You know what's very cool? Throughout the year, I get various tax documents in the mail, and I guess I put them in a file in my filing cabinet, a paper filing cabinet, right?
Okay.
But if I could put them in Box and then just forget about them, and at the beginning of the next year, hook up my, tax software to Box and say, hey, go find all of my tax documents, and then you have this AI set up, I wouldn't have to do anything, right?
That is certainly, the potential of this, exactly what you've just, thought about. One of the things that's incredibly exciting is imagine you're inside of a sales organization of a large company, and there's, hundreds or thousands of documents that have the answers to critical questions you might have. Now you can just ask the question. You can say, what's the price of this product? Or what's the best way that we sell this technology to our customers? And AI will give you an answer back based on the existing assets that you have in the enterprise, as opposed to, waiting around for some expert inside the organization to hopefully be able to answer your question right at the right moment. And so these are the kind of things that we're going to be able to do with all of the data we have, leveraging AI.
I don't think my pitch was juicy enough for Aaron. I think he's looking at a much bigger, scalable enterprise issues, and I was just worried about doing my taxes.
I do wonder, Aaron, that where is it, when you look at industries, that you think will be the most uptick and most growth potential for you guys specifically?
Yeah, I think industries that are very information heavy, so financial services, consulting, professional services, global manufacturing, lots of supply chain data. These healthcare, government, these are industries where there's a lot of documents, there's a lot of value that is trapped inside of those documents right now. A tremendous amount of intellectual property within these organizations are trapped inside of files, and AI lets us actually go and leverage that data for the first time. We were talking to a customer within the media and entertainment industry, and they had this great use case that literally could not have been done before without AI, which is they have a sponsor that wants to be able to sponsor certain projects, within the organization. And right now, they rely on kind of, fortuitous luck that the advertising person happens to know all of the projects that might be possible across the entire organization. They don't have a database where that knowledge is sort of kept inside of. But now you can actually just ask the documents. You can say, well, which projects would be most relevant to this particular sponsor? And so this actually is going to create new revenue generating opportunities for customers by being able to leverage what's actually inside of the data that they have.
All right. Good to check in with you. Aaron Levy, he is, of course, the co-founder and CEO of Box, joining us on Zoom from Redwood City, California. One thing I would argue, Matt, is that we're still kind of figuring this out.
I just think there's so many use cases for it.
I don't disagree.
It is a juicy, juicy technology. I'm going to come up with a better pitch for
You're not
Aaron.
afraid of it anymore?
No.
You were.
Well, if it becomes sentient.
This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Well, as we headed into today's close, the major averages, they started pairing some of the earlier losses. We did end the session down, but a little change for the Dow Jones Industrial Average and the S&P 500. The NASDAQ, that fell the most in percentage terms, down close to 0.4%. The bond yields, they also climbed on the day today. And then you had bank stocks, they were pretty weak. PacWest, Bancorp, that was down, 3.2%. JP Morgan Chase, that also slid in today's trading session. You had a renewed call to raise the debt limit from Treasury Secretary Janet Yellen, that also adding to investor concerns. And in the driver's seat today, that University of Michigan sentiment survey showing inflation expectations rising. And that's a concern because it's kind of a self-fulfilling prophecy there. So once again, let's look at the averages. S&P 500 closing down 6 points, down 0.2%, we'll call that. The Dow, 8 points lower. And the NASDAQ 100 ending the session down 49 points. So for the S&P 500, that's the second week in a row that we ended the week in the down column. And that is your Bloomberg Business Flash. I'm curious, Carol, do you keep count of the number of times that Matt corrects you on the air?
I know. He is so lucky.
Mr. Grammer?
I know.
I don't do that. I don't do that.
I know it's News Corp.
I haven't heard her splitting her infinitives or ending a sentence with a preposition.
Well, I just,
We still have another hour and a half to go, so it could happen.
It's just, who, Anna.
It's a good thing I
a lot of
really
people
adore
say
this
News
guy, and
Corp.
I've worked with him for so long that I let him get away. I let him slide through.
Well, you're very, very patient, I should say.
No, I did want to leave.
Tucker always throws me under the bus.
As he should.
Have you ever heard of? Have you ever heard of the reason that John Tucker has kitty litter strewn across the backseat of his car?
I knew we were going there.
Do you why?
This is true. It's legendary. Well, no. Okay, real quick. Sent number one son with a can, it's a 5-gallon can. Hey, I need this for the mower. Go to blah, blah, blah. So he comes back and I lift up the can. There's only 3 gallons. What happened to the other 2 in the back seat? The only way I was told to get that smell out of the car was pour kitty litter on it. And I just left it there because it just didn't go.
Did it work?
No, they wouldn't even park my car in the garage across the street because it smelled so bad.
Like gasoline or kitty litter?
Well, it's the combination of the two, which is a very unusual odor. Anyway, that's the kitty litter story.
John,
you know it now.
There's a streaming service called John Tucker, or a streaming series. All right, John, we'll come back to you in a little bit. Hey, let's get to our weekly crypto segment. And we draw upon a story in the new issue of Bloomberg Business Week, which is out on newsstands, online at Bloomberg.com/businessweek, and of course, always on the Bloomberg terminal. It's a story about how the crypto winter has cost true believers a lot more than their money. So, what are you thinking?
Well, I read the story, and I want to know how. I mean, the thing that sticks out to me is like Chris bought Bitcoin. So I want to know how much he bought, at what price.
So let's ask him. Chris, we're talking about Christopher Beam. He's Bloomberg Business Week freelance contributor. He wrote this story. He does join us on the phone in New York City. Chris, good to have you here with Matt and myself. You talk about a lot of others. You do talk about your own involvement. First of all, I'm curious how this story came to be. What was the pitch to Joel, or what was the pitch that Joel came out to you with?
Hey, yeah, great to be here. Well, the original idea came out of a piece that I did a couple of years ago when the crypto market was at its peak, mid-2021. And at that time, I was interested in looking at the different communities within the crypto universe. So there were the Bitcoiners, there were the Ethereum folks, there were the people kind of gambling on DeFi. And what I wanted to do this time was to revisit those communities. But what I found was that instead of, slicing them up that way according to their investment, this time I thought it made more sense to talk about them in terms of how they were thinking about crypto now that the market has completely collapsed. So it's really, this piece is more of a look at the different coping mechanisms that people who once believed deeply in crypto are using to kind of explain what's happened in the last year or so.
Well, so we had two peaks in 21, 63 and like 67. Did you buy after the first peak, or I mean, did you buy after you did that research?
It was running up to the first peak. I mean, as I mentioned in the piece, I had a friend who kind of, my friend George, who was telling me about it and was excited about it and talked me into it. I mean, unfortunately, like a lot of people, I bought toward the top and ended up getting, pretty
you lost half your money.
Disappointed in the direction of
you got killed, right? Come on.
Excuse me, sir.
You got killed, right?
He got killed,
it was
but
really rough.
But not literally, fortunately, because
no.
George offered to commit seppuku when he lost his parents' money, right? Which is that's when it gets into real problem areas.
We're laughing about it, but people really thought, okay, this is it.
Oh yeah. I mean, George had kind of planned his financial future around it, calculating just how much he needed to put away in one of these crypto banks in order to earn enough interest every month to pay his rent. So he'd run the numbers as the numbers had been presented to him, and then sadly lost a huge chunk of his parents' money in the Celsius bankruptcy. So it's not funny, and I think I haven't seen the most recent numbers, but I think the vast majority of people who've put their money in crypto are down.
Oh, not the vast majority of people I knew. I started looking at crypto 13 years ago. Right?
I have to say, I remember when Matt here did a piece, it was like I
bought my first Bitcoin for $600.
Right.
And most of the people that I know in crypto were around at that time. So they
did okay.
Their parents are very happy people. You looked at this right at the peak. So, I mean, you could have done this story on the dot-com bubble. You could have done it after the housing crash. You could have done it for the Wall Street Bets crew.
The tulips back in
the double problem for George is that not only did he see his investment dive from the peak, but also he got scammed by the people at Celsius. And what I was thinking when I was reading the first part of your story, Chris, is that these people are so stupid for keeping their money on the centralized platform. If you're all into decentralized, if you're all into Bitcoin, the whole thing is about trustless.
Cutting out all the middle
systems,
folks, right.
And you want to keep the money on your own wallet, not let Sam Bankman-Fried hang on to it in the Bahamas, right? But then you sort of you address that actually in the story.
Yeah, I mean that's part of the irony here is that a lot of the sort of cascading failures of the past year came because of these large centralized crypto institutions. So yeah, I think people like George learned the hard way that if they are going to hang on to their money, they need to keep it somewhere where they don't have to rely on someone else. And as you saw in the piece, a bunch of people I talked to focused on this as the lesson of the crash. They said, well, this is a purifying event that shows that we need to focus on decentralization, which they consider to be the true or original purpose of crypto to begin with.
I mean, is there something, smart in terms of kind of dividing all of these people into their communities? And in the story, it's really kind of fun to go through, but you talk about the double downers. So people who maybe lost stuff, but they're like, I'm all in. It's like the gambling mentality. Folks who...
I thought it was interesting that... I thought the trader psychology was really interesting. That Chris, you found... talking to, I guess, a psychologist, that people are much more likely to sell when they're up than they are when they're down. And a good trader has to know when to cut her losses, right?
Yeah, absolutely. I mean, this was new to me, as I probably new to a lot of people who are not experienced investors. That people, if you buy an asset and the value goes up, you're much more likely to declare victory and sell it than if it goes down. You're much more likely to hang on to it and kind of ride it as far down as it goes. And the explanation that I heard for this, they call this the disposition effect. The explanation is, on the one hand, you as your asset decreases in value, you become more and more what they call risk loving. You're comfortable with the risk, but also they say that you feel like you have less to lose, so you might as well hang on to the asset as long as you can.
Can we just finish with 30 seconds? Because like everything in our world right now, there's an AI, ChatGPT element. I mean, is that the next like chapter for crypto? Is that the next kind of new life, if you will? And just quickly.
Well, I did speak with some people who said that, AI is going to somehow save crypto when you connect the two technologies. I'm skeptical, but if you're looking for a narrative about where crypto can go from here, I can see how that would be an enticing one.
Yeah, you end saying what? You're going to look into it, but you haven't yet?
That's accurate.
Okay.
It's good to be skeptical, though. Journalists are supposed to be skeptical.
You're right. Got to ask the questions. You got to poke into it. Good to check in with you, Chris. Have a great weekend. Chris Beam, he's freelance contributor at Bloomberg Business Week. This story is in the new issue of Business Week on newsstands.
Someone else
speak at Bloomberg, on the Bloomberg, and at Bloomberg.com/businessweek. What?
Someone else in his story also got a tattoo of the crypto she loved, just like Novogratz did with Luna.
I know. All right, we gotta move on. Let's get to World and National News. Nancy Lyons standing by in our DC newsroom. Hey, Nance.
Thanks, Carol. Biden administration officials say there has been no tsunami of migrants entering the U.S. at the border today following the lifting of the Trump-era policy, Title 42. One Homeland Security official says they continue to encounter high levels of non-citizens, but there's not been a substantial increase today. That's been echoed by Mario D'Agostino, who is the deputy city manager of El Paso, Texas.
The numbers are truly low at this point in time.
D'Agostino says they're spreading out their resources for a consistent stream of entries over the next couple of weeks. He's convinced they will be able to handle the crowds. A U.S. Marine veteran who put an agitated New York City subway passenger in a fatal chokehold has now been arraigned on a manslaughter charge. We get the latest from Bloomberg's Jill Schneider.
24-year-old Daniel Penny appeared in court hours after turning himself in at a police station after prosecutors said they were charging him in the May 1st death of Jordan Neely. He did not enter a plea. Penny was released on $100,000 bond. A judge ordered him to surrender his passport and not to leave New York without approval. Neely's death sparked protests, while others embraced Penny as a vigilante hero. Prosecutors say they're seeking a grand jury indictment. The charges could carry a maximum penalty of 15 years in prison. Penny is due back in court on July 17th. Jill Schneider, Bloomberg Radio.
Lori Vallow Daybell, the mother accused of killing her two young children and conspiring to kill her husband's wife, has been convicted on all charges in Boise, Idaho. It was a trial filled with testimony about doomsday beliefs. Relatives of the victims cheered outside the courthouse following the verdict. Prosecutors successfully argued she and her husband carried out the murders to collect life insurance and Social Security money. Global News 24 hours a day. I'm Nancy Lyons.
hits, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. This on a day as we head toward the close, we had a bit of a rebound, pairing some of the earlier losses that we saw for the major indexes. In the S&P 500, you had 7 of the 11 major industry groups ending the day actually higher. The stocks that hold up during an economic slowdown or a recession, those are the ones that did the best. The biggest drag that came from the discretionary consumer stocks. That's all the stuff that you don't really need during a recession, or at least you don't buy. An unexpected jump in long-term inflation expectations, that was in the driver's seat for traders for most of the day. Janet Yellen once again weighing in on the debt ceiling debate. We spoke exclusively to the Treasury Secretary. She was on the sidelines of today's G7 meeting in Japan. She says it's still kind of unclear exactly when the government would officially default.
What I've said is early June. And potentially as early as June 1. As we get closer, I may be able to provide more refined guidance. But, there is a lot of uncertainty about the exact level of cash balances and payments that we have to make.
Yellen speaking exclusively to Bloomberg. Catch the full interview on Bloomberg Daybreak podcast on Apple, Spotify, or anywhere you get your podcasts. Right now, the Dow Jones Industrial Average, let's give you the update there. It ended the session down almost 9 points at 33,300. The S&P 500 ended the session 6 points lower. That was down 0.2%. 4124 on the index. And the NASDAQ 100, 49 points lower on the session. That was down 0.4%. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash.
John Tucker, are you a Twinkie eater?
I like to deep fry them before I eat them.
No.
Man, I would love to have that.
You know what Matt Miller's having for dinner tonight? All right.
Fried Twinkies.
Should we move the garbage can a little closer to Matt? He looks kind of green.
No, don't say that. Don't say that. All right. John Tucker, thank you so much. We are going to talk a little bit about Twinkies and Hostess cupcakes, maybe some Big Texas cinnamon rolls and Clover Hill honey buns. Kind of hungry. These are all the brands and more that are under the Hostess Brands umbrella. They did report, by the way, earlier, some earnings. The stock initially popping on the news as much as 5%, but it did lose most of the gains by day's end following the report. Stock, though, up about 17% so far in 2023. So let's get a look at the business. I know Matt also talked with our next guest earlier in the week, Hostess Brands President and CEO Andy Callahan, joining us on Zoom in Chicago. Andy, how are you?
Carol, I'm doing great. Thanks for having me.
Well, nice to have you here with us. Matt has been eating Twinkies and some other things heading into this
in
interview.
Preparation. Can I just say why?
I love the intro. Don't forget our Wortman cookie franchise as well. But we're proud of all of our brands.
Yes. Well, but Twinkie is the main. I mean, TWNK, Twinkie is the ticker. I went out. I talked to Andy, I think yesterday.
You did, right?
He said that they've changed. They're constantly working to improve the Twinkies, and so I went out and I bought a lot of them, and I've eaten multiple, and they are very good. They do taste better than I remember last time I had them. They still taste the same, but just more kind of zingy a little bit.
Yeah, well, being able to do great tasting and moist cake at scale is not an easy feat. We like it that way. It's hard to replicate our business, and we love bringing great, high-quality snack products to consumers.
It's moist, Carol.
No, I like moist cake too. Hey, well, let's get a little serious though, Andy. I do think about your business. Like when you guys, what channel is it? Walmart? Where is it that you really sell the most of your product?
One of the strengths of our portfolio, obviously that customer is a large and important customer of ours, but we're leading in single-serve sales, immediate consumption. One of the strengths of our distribution of our business is our distribution model. We're able to access almost everywhere that consumers are. And in the baked goods category, we're about 10 points higher availability than our next closest competitor. And that's really due to power of our supply chain, our business model, and our access. So all of our customers are important to us. The diversification of our distribution is important. That customer you mentioned is obviously highly important. And we focus a lot on building sustainable partnerships with all of them.
So I went to Duane Reade to get these. I did stop by the local, single, mom and pop
like a market?
LA
like a
Gourmet.
market
They didn't have Twinkies, so I went over to Duane Reade. How do you get them into every shop, or are you only focused on like CVS, Walgreens? What's your distribution strategy?
Yeah, so this is one of the beauties when we reimagined the business model that allowed us to create this great snacking business, a modern contemporary business under 100-year-old iconic brands that you talked about. We did it in a way with new technology that allowed us to bring high quality products through a distribution system that's really hard to do in baked goods. So for Duane Reade, for example, a terrific customer, Walgreens, that we partner with, we have a distributor partner that are classic distributors that allow us to get it there. For some of our larger, maybe traditional grocery retail customers, we have a tremendous internal distribution network that we actually opened our distribution center several years ago, and we go direct to those customers through their warehouse. So it depends on the customer, but that partnership with our very important distributor customers allow us to get access to all small doors, large C-store customers, as well as smaller ones.
You'll be happy to know Duane Reade had 3 separate displays. They had, with the bread products, they had some Hostess, a separate Hostess section. With the candies, they had a separate Hostess section. And then right when you walk up to the checkout, they had a Hostess section there as well. So
It's called impulse buy. Like you're standing on the line and you're hungry. I've been there. I've done that. Hey, Andy, I'm sure you've gotten this question a million times. As people focus on healthier eating, and I'm not saying that what you offer is not, but I'm just saying, I have a 20-year-old, and she has been for years turning things around, looking what's in the product. How do you think about that moving forward? And are you seeing pressure, and demand from customers, younger customers, that they want you to shift some of what's in the product? And I think you have been to some extent.
We have been. We are. First of all, we make our products with real eggs, flour, like everybody does. There's certainly some other ingredients in there that allow us to get through shelf life, but we're working to minimize them as much. From a consumer perspective, nearly 70% of consumers indulge in snacks snack more than at least 70% of the time, and almost half the time. That's been an unrelenting trend over the years. Now, there's a false choice that consumers that eat healthy don't also treat themselves or reward themselves with indulgent snacks. They can both grow, and they are growing because consumers snack more often, and that trend's been happening. So we look to bring our snacks to consumers in a very contemporary way, whether it's a 2-bite bouncer that we just launched, or our new Kaz bars that are in multi-pack form, a smaller version, or a larger one that we do in our C-store for our male consumers that are looking for it. So we give them snacks. Snacks and indulgent snacks are on trend, and we do it in a very contemporary way. That's what brings them through. We call it a moment of joy. And that's what our team works for, to inspire these moments of joy when consumers are looking for reward me, treat me.
You got to
get off to
You got to get The Rock.
Start of the day.
You got to get Dwayne Johnson, The Rock, to eat these on his cheat day.
Yeah, and Rock should call me. I bet you Rock would love our Kaz bars. The Rock would love these Kaz bars, and I know his kids would too. Millennial parents, young C-store males, when we tested the Kaz bars, they love it because it brings the great cake we're talking about in a multi-layered form.
He's been pushing the Kaz bars for a long time. Andy, every time I talk to you, you're pushing the Kaz bar. I'll bite. I'll bite.
Andy, he's going to leave here and he's going to stop at the Duane Reade or something and find the Kaz bars. I'm just telling you.
Listen, we do both. We do our contemporary icons, Twinkies, cupcakes, ding-dongs, reimagining them with
Okay.
quality and bringing them to our consumers,
Andy?
and also bring out new innovation. They both are important.
We got to run. I'm hungry. That's all I'm going to say. Andy Callahan, CEO of our Hostess Brands, on Zoom from Chicago. This is Bloomberg.
Your company news headlines on Bloomberg Radio.
And from Bloomberg World Headquarters, I'm John Tucker. Well, we had a recall for a Tesla. One of the biggest markets for them is where the recall came. Let's get more in this report from Bloomberg's Kimberly Adams.
Tesla is recalling more than 1 million vehicles in China due to software issues, according to China's top quality watchdog. The recall covers parts of imported Model S, Model X, and Model 3 vehicles, as well as Model 3 and Model Y vehicles produced in China between January of 2019 and April of 2023, according to a statement filed with the State Administration for Market Regulation. Kimberly Adams, Bloomberg Radio.
And First Solar, that was actually the best performing stock in the S&P 500 today. Solar stocks overall surged after the IRS and the Treasury Department. They issued no guidance on a clean energy tax credit boost for manufacturers that source their components in the USA. The American Clean Power Association, they said in a statement that the new guidance is going to help unlock billions of dollars in investment in American clean energy technology and manufacturing, as well as its workforce. And Charles Schwab, they said total assets brought to the firm by new and existing clients totaled $13.6 billion in April, the latest month for which they have stats. The client withdrawals slowed apparently for a third straight month. Executives there have been seeking to ease concerns about Schwab's outlook. And those are the company stories that we've been following this hour. I'm John Tucker. You're listening to Bloomberg Radio.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, everybody, you are listening and watching Bloomberg Business Week on this Friday. I'm Carol Master along with Matt Miller. Tim, as you know, on leave. Hey, let's get another check on world and national news. Off to D.C., your 99.1 Newsroom, and Nancy Lyons. Hey, Nance.
Thanks, Carol. Treasury Secretary Janet Yellen is in Japan, where G7 finance ministers are expressing concerns about whether the U.S. will default on its debts. Bloomberg's Anne-Marie Hordern is traveling there and says the Treasury Secretary is not ready to look at the what-ifs.
He does not want to even speak out loud the contingency plans. She says there is no good deal unless Congress lifts the debt ceiling.
Bloomberg's Anne-Marie Hordern reporting from Japan. A White House meeting with congressional leaders has been postponed until next week. The Biden administration's number 2 diplomat is retiring after decades of U.S. government service. Deputy Secretary of State Wendy Sherman will step down from the post this summer, having been involved in many Democratic administrations since Bill Clinton was president. Daniel Penny has been arraigned in New York in the death of homeless subway passenger Jordan Neely. Penny turned himself in to authorities earlier today on charges of second-degree manslaughter. He was seen on video using a chokehold on Neely. Dante Mills is representing Neely's family.
Mr. Neely did not attack anyone. He did not touch anyone. He did not hit anyone. But he was choked to death.
Mills says people on the train incorrectly assumed that because Neely was homeless, he was also dangerous. Penny was released today on a $100,000 bond. Well, it's being called the highest price paid for a professional sports franchise in U.S. history. A group led by billionaire Josh Harris has agreed to buy the NFL's Washington Commanders from longtime owner Dan Snyder and his family. The sides announced the deal in a joint statement this afternoon, roughly a month after they reached a tentative agreement for a record $6.05 billion. The NFL owners will still need to approve the deal. NBA Hall of Famer Magic Johnson is among Harris's partners. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Now back to you, Carol and Matt.
All right, Nance, thank you so much. I am Carol Master, along with Matt Miller, here in our Interactive Brokers studio on YouTube and on Bloomberg Originals. So, what are you watching?
Well, you know what? It's honestly the inflation story that has, to me, seemed like the most important thread throughout the trading day.
Okay.
The University of Michigan numbers that came out probably at 10 o'clock this morning. Let me look. Go. Yeah, 10 o'clock this morning. We saw that 1-year inflation expectations are 4.5%. So that's more than the survey and just slightly less than the prior. But the problem is 5 to 10 years. So longer term inflation expectations, 3.2%. That's higher than the survey by about 10%, and it's more than we saw last time. Inflation expectations are really what the Fed needs to make sure stay anchored. If they come undone and start to float higher, it's going to be a much more difficult battle that Jerome Powell has ahead of him.
Maybe the Fed is wrong. Maybe 2% inflation doesn't make sense. Maybe 3% makes sense. And maybe people who are actually out there spending on things are saying, I don't know how it's going to get back to 2%, and that's why we think it's going to be higher.
I mean, to me, 0% is the only thing that's fair.
You just told me you met with a financial planner, and you were talking about college costs for your now little one and what it's going to cost when you send her to college in 15 years or so.
And he said it was going to be about $1 million if I want to send her to an Ivy League level school.
For the 4 years.
That's to me,
that's $250,000 a year.
Like, that's not good. I don't want to see inflation at 3%. I don't want to see it at 2%. You know, as Ronald Reagan said, inflation as violent as a mugger. It's as frightening as an armed robber. It's as deadly as a hitman.
I'm just saying that maybe this makes